Hey everyone, welcome back to my channel. So today we'll be learning a very important topic in SAP MM, and that is material valuation. Now learning about this topic is very essential if you want to learn about the MMFI integration and if you want to learn about other important topics like automatic account determination and split valuation. So first we'll discuss about material valuation in this video, and then in our subsequent videos we'll learn about the automatic account determination and split valuation. So let's start with our today's topic, that is material valuation. And in this video, we'll learn about what is the meaning of material valuation, what do you mean by the terms valuation area, price control and valuation class. So let's start. So first of all, let's understand what is called valuation data of a material. So basically, the material valuation determines or records the stock value of a material. Whenever you will have material in your inventory, the total stock value is basically called the valuation of the material. And this valuation is basically determined by a very simple formula, that is the stock value is equal to stock quantity multiplied by material valuation price. So you can see here the stock value is determined by multiplying your quantity by its material valuation price. And it is very important to understand this concept in SAP, that how system decides this material valuation price. Okay. So during goods movement, the total value of the material is updated along with posting of financial documents. Whenever you will post a goods movement for a material, if the material is valuated, then its total value will get increased or decreased, and in the background system will also post the financial document, and if required the valuation price will also get updated in the material master. As we have seen in our previous series on material master, that we maintain the material valuation data in the accounting view of the material master. So in the accounting view, this valuation price may also get updated when you do goods movement. So basically your transactional activities updates your master data also. Okay, so this also we'll see in this video, that how this valuation price will get updated in the material master when you perform goods movement for certain materials. Okay, and finally you can see material valuation represents a link between MM and FI, because it is the basis of updation of GL accounts in FI. Whenever you have any inventory, in the background in FI you have a GL account which represents that inventory. So this particular material valuation data is basically a bridge or a link between the MM and the FI module. So now let's see what are the controlling factors of this material valuation. So this material valuation is controlled by basically two factors. One is the configuration and another one is the material master records. And this configuration basically is the configuration of material type. We already have seen in the video on material type configuration that in the material type configuration you enter something called as account category reference. Then you update what will be the price control, and you also have a checkbox which tells the system that price control shall be mandatory. If you haven't watched my video on material type configuration, then I'll highly recommend you to watch that video. I'll keep the link in the description, you can check there. And you can see here the other controlling factor that controls the material valuation is the material master record, because whatever you will enter in the material type configuration will get defaulted in the material master, and in the material master you will enter something called as valuation class. Now this is the most important entry in the material master which links your MM to the FI side. That is, this valuation class will only decide what all GLs will be called by the system when you will post the material movements. Okay, so this valuation class is part of your material master data, and these configurations are part of your material type configuration. So you can see here you have two controlling factors. First is you can control the valuation through the configuration of material type, and you can also control this valuation through the material master records. And in the configuration you can also define whether the material type corresponds to a material which is valuated or non-valuated. So you also have configuration related to value update control. This also we have seen in our material type configuration video, and we have also seen this in our video on valuated, non-valuated and non-stock material. Okay, so these two factors basically decide your material valuation, and understanding these two factors is very important to understand the material valuation philosophy or material valuation process in SAP MM. Now let's understand what is called valuation area. Whenever you will run some reports which are basically run by FI people, but they give you MM related data also, you will find a field called valuation area. Like if you run the T code MB5L, which basically gives the stock value in MM side and FI side, there you will find a field called valuation area. So what is this valuation area? The valuation area is basically the organizational level at which material is valuated, or the accounting data is maintained in the material master. We already have seen in our material master series that whenever you maintain a material master, you maintain the data at multiple levels. Depending upon the view that you select in the material master, system will give you a pop-up to enter the particular organizational level. And when you select the accounting one view, basically system asks you to enter the plant. Now that plant is basically the valuation area. So in the system, the first configuration that you have to do is to configure this valuation area. And this valuation area can be defined as either company code or plant. And this is one of the fundamental settings that you will do when you will implement SAP. So as a MM consultant, whenever you are implementing SAP, first thing that you have to verify or first thing that you have to configure is this valuation area. And once you configure this valuation area, it will not be changed, or it will be very difficult to change. So first thing that you define is valuation area. You can keep the valuation area either as company code or as plant. And whenever you will maintain the valuation data will always be maintained at valuation area level. And you can see here, in most organizations, the valuation area is kept as plant only. So whatever system you're working on, you can simply verify that what configuration has been maintained for valuation area. Now, if you have kept the valuation area as plant, then whenever you maintain the accounting data of a material, system will ask you to enter the plant, in turn, the valuation area. Okay, so this is very important to understand that whenever you see a field called valuation area, you have to understand that it can either be a plant or company code, and you have to verify from the configuration that at what level the valuation area has been defined. Now let's understand how the accounting data is decided for any material. That is, in a business, what are the deciding factors on which you will base your accounting data? So basically you have to ask two questions. The first question is whether the stock of a material is to be valuated at a constant price, or should the price be adjusted to match the fluctuations of the cost price. Now what is the meaning of cost price? Whenever you will purchase any material from an external vendor, the prices may change. Let's say that you buy a product today and after 1 month, and you buy it from two separate vendors, or even if you buy from the same vendor also, the prices quoted in these two cases may be different. So due to external factors, the prices will be fluctuating. So you have to decide that in your system, what would be your philosophy or what would be your setting for maintaining that price. Whether you will average out that price or you will keep that price as constant. Let's say that you're producing some material. So the price of material is dependent upon your organizational's decisions. In that case, you might decide to keep the prices constant. Let's say for a particular month, you will keep your sale prices constant and you would want to report your inventory prices also constant for that particular month. So in that case, the constant price is justified. But if you're buying a material from any vendor, then these prices will be fluctuating, and it would be a good decision to average out the prices in your system to basically match the fluctuations which are happening in the outside market. Okay, so first thing that you have to ask is whether your material is valuated at a constant price or whether the prices are to be adjusted in your system. Now, it totally depends upon the type of material which you are dealing with. Now, what happens normally for the raw material, we adjust the price because we'll be purchasing the raw material from the external vendor. For finished goods, we keep this price as constant, but it totally depends upon your organization's requirement that how they want to evaluate their material. Okay, so this first factor is called price control, and it is very important that what price control you're deciding for each of your material types. Then what is the next controlling factor? The next controlling factor is in which GL account should the stock value of this material be managed. That is, whenever you post a GR, then in the FI side, which GL account you are going to post that inventory, or against which GL account you will be showing your inventory balance. So that GL account also has to be determined, and this will be determined by something called as valuation class. Okay, so there are two things. First is the price control, and second thing is the valuation class. And these two combined together will basically create your valuation data of the material master. In the material master, these two are the most important fields that you will enter and maintain in your material master record. So now let's understand the first factor, that is called price control. So the price control procedure set in the material master record determines the value used to evaluate the goods receipt of a material. That is, whenever you do a goods receipt, what value system will decide and post in the inventory. This decision is controlled by something called as price control. And you have two options in the system. One is called standard price and another one is called moving average price. Okay, and this also decides how price variances are handled when you post invoice receipt, which has a different price than your purchase order price. Let's say that you have purchased a material at a particular price. You do the goods receipt, but when the vendor raises the invoices, there is a variance between the PO price and the invoice price. And if you accept that variance, then where that variance amount is to be posted is also decided by this price control. We'll see in the subsequent slides how this setting of price control manages these activities. So let's understand the key differences between the standard price and moving average price control. So you can see here, for a standard price, all inventory postings will be carried out at the standard price defined in the material master. The material master becomes the main driver, and in that case, whatever entry is there in the material master, system will always carry out the posting at that particular price. But in case of moving average price, all goods receipt against purchase order shall be evaluated at the PO price. System will not consider the moving average price which is there in the material master. Rather, system will take the PO price and then add it to your existing inventory value. And postings other than this goods receipt against PO will be carried out at MAP or prices entered during said posting. That is, let's say that you do goods issue, then system will issue that goods at the moving average price. Or if you do goods receipt without reference, that is, you do not have a purchase order and you post either movement type 501 or 521 or 561, then you will have the option to enter prices in the Migo screen also. If you enter prices in the Migo screen in a field called external amount, then that price will be considered to evaluate the goods receipt. Or if you do not enter, then the moving average price in the material master will be considered for posting that particular goods receipt without reference. Okay, so you can see this particular line is very important, that all goods receipt against purchase order shall be evaluated at PO price. Then you can see here, if a goods receipt or invoice receipt contains a price that differs from the standard price, then difference will be posted to something called as price difference account. As we discussed, when you do goods receipt against a purchase order, if that purchase order is having a price which is different from your standard price of the material master, then system will not consider that PO price. System will post the goods receipt value at the standard price only, and the differential amount system will post to the price difference account. Similarly, when you post invoice receipt and you make changes to the value, that is, there is a variance between PO and invoice, then that variance also system will not post to the stock account. System will have to post that to the price difference account. In case of material with moving average price, whatever prices will be there in the PO, system will post that to your stock account. And if there is a variance between PO price and invoice price, then that amount also will be posted to the stock account, provided a sufficient stock coverage is there. That is, whenever you are posting the invoice receipt, the total stock at that moment should be greater than your invoice receipt quantity. So you can see here, for a standard price, system will not adjust the price in the material master. System will always keep on posting at the standard price which is there in the material master. And if there is any differential, system will post in the price difference account. In case of moving average price, system will always adjust the moving average price if there is a differential amount which is to be posted. The system automatically calculates by dividing the total stock value by the total stock quantity. So whatever stock you have with a particular value, system will add the quantity and the value when you do goods receipt, and then finally decide the final moving average price. In case of invoice receipt, system will add the differential value and then decide the new moving average price. So you can see here the standard price is commonly used for finished and semi-finished goods. The moving average price is commonly used for raw materials and trading goods. Okay, so whatever material you are purchasing from outside, generally you keep the price control as moving average price. Whatever material you will be producing in-house, generally will keep the price control for such material at standard price. So now let's understand how different accounting entries will happen when you have the material at moving average price and standard price, and when you do a goods receipt. So you can see here you have examples for the same material with different price controls. So first we'll see what happens with the moving average price control, and then we'll see what happens with the standard price control. So you can see here you have a material with moving average price control. The moving average price in the material master is 20 rupees. The total stock is 10 quantity. So the total stock value is 200 rupees. Okay. Now you have a purchase order for 10 pieces at 25 rupees per piece. So you can see you have a per unit price which is different from what is maintained in the material master. And you do a goods receipt for 10 pieces. So let's see what will happen for a material which is maintained at moving average price. So what system will do? System will decide the GR value by taking the PO price into consideration. So system will basically post a GR value of 250 rupees. That is 25 rupees per piece multiplied by goods receipt quantity of 10 pieces. So the stock account gets updated with 250 rupees. That is a debit entry for 250 rupees. And you have a GRIR entry for 250 rupees. This GRIR you will clear through Miro process and will create liability against the vendor. So you can see your stock account gets increased by 250 rupees. Earlier you have 200 rupees in your stock account. So the total value becomes 200 plus 250, that is 450 rupees. And what is the total quantity? Earlier you have 10 pieces. Now you have done goods receipt for 10 pieces. So total you have 20 pieces in your stock. So now what will be the new moving average price? It will basically be 450 rupees divided by 20 quantity. So you can see here 450 divided by 20. The new moving average price will get updated to 22.5 rupees. Okay, so you can see here when you did a goods receipt with a different PO price, system adjusted the moving average price accordingly. Now let's see what will happen with a material with standard price. So again you have standard price of 20 rupees and you have total stock of 10. So total stock value is 200 rupees. Now when you do GR for 10 pieces, system will ignore this PO value. Why system will ignore? Because in the material master record, you have maintained the price control as S, and you have told the system that the material valuation is not to be changed. So what system will do? System will post 200 rupees in the stock account. System will take the quantity from the goods receipt and value from the standard price in the material master record. And system will post 200 rupees to the stock account. And how much system will post in the GRIR account? System will post the PO value in the GRIR account because this is the amount that you have to pay to the vendor. This is the amount at which you have to valuate your material, but this is the amount that you have to pay to the vendor because the purchase order has been placed at rupees 25 per piece and you are doing goods receipt for 10 pieces. So you have to pay to the vendor 250 rupees, and hence system will post a GRIR entry of 250 rupees here. And then the differential amount where system will post, system will basically post in the price difference account. So you can see here, because of this price control as standard price, system has to post this differential amount in the price difference. System cannot post this PO price to your inventory. Okay. And hence system posts 200 rupees only, and differential amount is posted to this price difference account. And finally, the standard price will remain same as 20 rupees per piece. System will update the total value to 400 and total quantity to 20, and the unit price will remain same. That will be shown in the material master. So through this example, you can understand how system decides how much value is to be posted to the stock account when you do goods receipt against purchase order, when your material is managed at moving average price or standard price. Now let's understand how system will post the values when variances are posted during invoice processing. So first we'll see the example with standard price material. So you can see here you have material with standard price of rupees 20 per piece, and you have current stock of 10 pieces with total value of 200 rupees, that is 10 multiplied by 20 rupees per piece. Then you have a purchase order for 10 pieces at rupees 25 per piece. You do goods receipt of 10 pieces, and when you do the invoice receipt, the vendor raises an invoice with per unit price as 28 per piece, and you accept that invoice and you process this invoice. So the total invoice value is 280 rupees. So now let's see at both these stages, that is at goods receipt and invoice receipt, how system will do the posting. So at goods receipt, we already have discussed 200 rupees will be posted to the stock account, 250 rupees will be posted to the GRIR account, and differential amount will be posted to the price difference account. Okay. When the invoice is posted, this GRIR will get cleared. So this credit entry of 250 will get cleared by this debit entry of 250 rupees. And how much you have to pay to the vendor? You have to pay 280 rupees to the vendor, because vendor has raised the invoice at rupees 28 per piece. So manually you will enter this price in the Miro screen, and then you will post the invoice. So system has to post a liability of 280 rupees against the vendor. So again, you have a difference between these two entries. So again, system will post this differential amount against price difference account. So in both these steps, system has to post in the price difference account because material is maintained at standard price, and system cannot post any differential amount to the stock account. So you can see here earlier you had 10 stock in inventory with total value of 200 rupees and standard price as 20 rupees. Once you did GR, then the total stock became 20 and total value became 400. Okay. Why this became 400? Because you had earlier 200 rupees stock and you added 200 rupees in the stock account. So total value becomes 200 plus 200, that is 400, and your standard price remains at 20 rupees only. When you do invoice receipt, then your stock is 20 only, because you do not post any quantity in the invoice receipt process. You can only post values, and you have posted a variance during invoice processing. But you can see during invoice processing, nothing has been posted to the stock account. Okay, so you do not have any value getting posted against stock account. So the stock value will remain at 400 only, and the price will remain at 20 rupees. So this is the effect of standard price control, that at each stage your standard price is not going to change. System will keep on posting the differential amounts in the price difference account. So you can see here the unit price of material is kept as fixed by the system at the standard price, leading to posting against price difference account during both goods receipt and invoice receipt. Now let's see what will happen when your material is managed at moving average price. So you can see you have material with MAP as 20 rupees per piece, and again you have the same status. Now when you do goods receipt, system will post the value at your PO price. Okay, so system will post in the stock account 250 rupees, that is 10 pieces multiplied by rupees 25 per piece, and system will post the credit entry against GRIR account for 250 rupees. Then when you do the invoice, now you are posting a variance, that is you have to pay 280 rupees to the vendor, but you have a GRIR entry of 250 rupees only. So this will get cleared by posting a debit entry against GRIR account for 250 rupees, and a vendor liability will be created for 280 rupees. Now the differential will get posted to the stock account. Why? Because the material is managed at moving average price, and system understands that system has to adjust that moving average price as per the postings being done in the system. Okay, so the differential amount is now not getting posted to the price difference account. System is adjusting that price to the stock account. So let's see how the inventory and the stock value is getting changed. So earlier you have 10 quantity with total value of 200 rupees and moving average price as 20 rupees. When you did the goods receipt for 10 pieces at 25 rupees per piece, you added 250 rupees to your stock account. So the total quantity becomes 20, that is 10 plus GR quantity of 10, that is 20 quantity, and total stock value becomes 200 plus 250. So the total value becomes 450, and system adjusts the moving average price to 22.5 rupees, that is 450 divided by 20. Then when you do the invoice receipt, the quantity will not change because you're doing invoice receipt, but 30 rupees now you are adding to your stock account. So what will happen to the stock value? It will increase to 480 rupees. That is 450 plus 30 rupees. This 30 rupees is basically the differential between PO price and invoice price. So the total value becomes 480 rupees, and again system has to adjust the moving average price, and now system adjusts the moving average price to 24 rupees. That is 480 divided by 20. Okay, so you can see here at each stage, system has to adjust the moving average price as per the postings being done. Now let's understand the another factor that is called valuation class, which is a very important entry in the material master record and which has a major role in deciding the material valuation and the automatic account determination. So you can see the valuation class plays a major role in automatic account determination. It is one of the deciding factors to determine GLs when a material movement is posted. And why this field is called valuation class? Because basically it is a field which is used to combine multiple materials on the FI side. So you may have multiple materials on the MM side, but if all those materials have the same accounting principles, or you want the same accounting entries or the same GLs to be called for all that material, then you can combine all those materials under something called as a valuation class. This is a 4-digit number which you enter in the material master record. Based on this valuation class only, system will determine what GLs are to be posted in the background when you post the goods movement. Okay, and how this valuation class is decided? So basically you have this linkage here. We already have discussed this in our material type configuration video also, that in the material type you enter something called as account category reference, and against account category reference you map the possible valuation classes, that is the applicable valuation class against a particular account category reference. And once you do this linkage, then whenever you create a material with this material type, then you can select these valuation classes when you will be maintaining the material master. Okay, so whenever you maintain a material master, in the valuation class field, if you take a drop down, system will propose the list of all the possible valuation classes based on the account category reference which is entered in the material type configuration. And you can see here, a valuation class can also be assigned to multiple material types by assigning the same account category reference to all such material types. But the relationship of account category reference to valuation class is unique. That is, under a particular account category reference, if you have assigned a valuation class, then you cannot assign that particular valuation class to other account category reference. So you have one-to-one combination between valuation class and account category reference. But under a particular account category reference, you can have multiple valuation classes. But each valuation class will be assigned to one and only one account category reference. Okay, so in this way we have seen how valuation classes are assigned to the material master, and what is the meaning of price control, and what is the difference between standard price and moving average price. So in this way, in this first part, we understood about the concept of material valuation. In the next part, we'll see the SAP demo on this material valuation process. We'll see the configuration, the master data and the transaction data. And we'll see how material valuation is affected by different price control mechanisms, and how depending upon different valuation classes, the GLs are called by the system in the background. So see you in the next part of this series on material valuation. Once we cover this material valuation, then we'll discuss about the automatic account determination and the split valuation process. So I hope that you've understood this concept, and I hope that you've liked this video. If you like my videos, then please like and subscribe to my channel, and please join my channel to support me and get exclusive perks. So see you in the next video. Till then, thank you so much for supporting me. Thanks a lot.